Let's get into it, my man. How are you?
I'm very good. How are you, man?
I'm good, thank you. I'm good.
It's good to
Been staying busy, and with all this COVID, I've actually had a good chance to dive a little deeper into the rabbit hole once again. It's a bit hard
yes.
to travel full time. I very quickly get separated from everything that's going on, just because everything is happening so quickly, and new things are coming into play, and rules, regulations, political things going on. Everything is happening right now. And COVID obviously hasn't stopped the amount of news coming out, but it's been good for me because I've been able to really get into it. So yeah, hopefully I can give some value today. I really
But the
hope so.
last thing that we spoke was just before, spoke about this subject was just before December. Well, face to face, we've been speaking about it a lot, hence why we've managed to make this podcast episode happen. But before, I think it was around about December time. It was this was the kind of first time that you opened my eyes to cryptocurrency and Bitcoin as well. So I can imagine since then, I know how much you knew then. So if you've learned even more, then that is why you're the man for the job. That's why I wanted to get you on here.
Definitely been digging deep recently, and I've learned a lot. And anything that I thought I knew back then has just been amplified now. And certain things I might disagree with myself from back then, and I've just tried to get a broader understanding of what's going on, and instead of just looking at cryptocurrency, kind of not giving up. I still follow it every single day, and I'm very, very deep into the idea and topic of it. But I try to step way further back and look at what's happening on a global scale, looking at financial value as a whole. So instead of just thinking crypto versus dollar or crypto versus pound or whatever it is, looking into what's going on in the bigger picture, right? And right now, more than ever, it's super important to gain an understanding of this. So yeah.
Yeah, man. I don't know too much about cryptocurrency. I basically know what you've told me, and a couple other friends have told me. But one thing that I do know is with this current situation is this could be a real opportunity right now. So that is exactly why I wanted to have you on the podcast. I just want to say welcome to the podcast. We'll be speaking about this for a while.
Much. It was an honor to be here. I'm happy to be on.
Yeah, it's a pleasure, man. Honestly, I've been really looking forward to this podcast for a number of reasons. Obviously, this is now episode 15, and all the other episodes have been trial and error, but this is the first podcast that has felt clear in my mind, that I know what I'm doing in terms of the pre-promotion, the post-promotion, and also being just one topic specific, which I think is very important, man. So if someone was to tune in today, they know exactly what they're going to get. We're going to be talking about cryptocurrency. We're going to be talking about Bitcoin, and that is it. So I'm really looking forward to it. It's obviously the first time I've went live as well. So I really appreciate you being
a part of it.
Hi, man. I'm very, very appreciative. So I'm
honored.
But this may actually come as a surprise for some of the people who follow you, or the people that know you, because naturally they would probably think that you're coming on the podcast to talk about photography or travel or something within those genres or niches. But we're here to talk
about that for another time, right?
Yeah, exactly. We've got plenty more podcasts after this to go deeper into that. But we're actually here to talk about cryptocurrency, and specifically Bitcoin, and why people should be considering this as an investment, no matter how small or how big.
Yeah, exactly. It's good time to be talking about it. It's really more relevant now more than ever. And I know you and I have discussed a little bit the path we want to go down with this conversation. So I don't want to start giving away too many things right now. I know you want to kind of follow a path, and this is good because for me, I just get going, and I don't really think so much about how much people know already. So I might lose you within a minute if I just start, rambling on, just because I'm so passionate about it. And there's just so many things I try to link together, and it just becomes a whole maze of information for me. So why don't you, start, taking it away, ask me some questions or something that you think could be valuable for the listeners, and I'd be happy to answer.
One thing about you, man, and you know this yourself, you're either all in or all out with a subject. You are obsessive when it comes to the details. So one thing I want to make really important here is I want us to pretend that this podcast is aimed at someone who either has never heard of cryptocurrency before or Bitcoin, or someone who is aware of them but doesn't really know much about them, which was pretty much me before you educated me and all of it. You know what I mean? So that's the target audience right now. It's very much a beginners. I want people, if they are tuning in, to come here with little to no knowledge and to go away from this knowing what they could do next if they potentially wanted to invest or get involved, or even just find out more information. So that's where we're at. What I will say as well is I wanted to do this episode because I feel like there is a certain stigma or ignorance attached to crypto and Bitcoin. But once you actually dig deeper and you find out more about it, it's not only fascinating, but can be a real opportunity to make a lot of money. If you obviously need there's a lot of elements to this, which we'll go into. But as, and more importantly, take control of your own finances and gain an understanding of what's going on in the world of banking and money as we know it.
Yeah, we got to always look at every opportunity with a wide goggles. You know, we can't just be like, oh, this is going to go up 100%. You got to understand why it's going to happen. And if there's anything in your kind of playbook that states maybe it won't happen, you really got to dig out the why it won't happen, as opposed to try to re-empower yourself in the idea of, oh, this is going to 100x, you know, I'm going to become a millionaire off of this one investment. Because a lot of people, the first mistake people make, and the most common mistake, is that they trade or invest with a love for what they put their money into. So a lot of people very quickly, they will believe that they're right, no matter how little knowledge they may have on the topic. They'll find something or they'll hear something from a friend and think this is amazing. This is going to go to the moon. I'm going to become rich. And then they put the trade on, they put their money in, and then they just stare at it every single day. And slowly it just decays away. And they think, oh, but tomorrow's the day where it goes up. So it really is important for people to not fall in love with their investment and instead have an objective point of view. But yeah, let's start. So I'll abide by your rules and try to, stick to
going every now and again. Just pull you back because I know you get excited.
Yeah, just pull me back when you need to. And if ever there's anything, if you think I just need to expand on it, or dumb it down a little bit, let me know, and I'll do my best to do so.
Absolutely, man. Sounds good. Now, as I say, before we get really into the cryptocurrency and Bitcoin, I want to talk about why it's so important and so relevant to talk about it now more than ever. Given the current economic climate, obviously with the coronavirus, it's having a massive impact on the economic climate. People are talking that we're going to potentially go into depression or a recession and things like that. So it's really important. As I say, we're quite clearly going through a difficult time in every way, shape or form.
Yeah.
But one thing people might want to be aware of is the potential, as I say, of this economic implosion, which could see the end of the monetary system as we know it. So first of all, let's talk about the difference between the terms money and currency. Now, I never knew there was a difference between this until you told me a few months ago. So it's something that I only recently learned. And can you also give us a description of both, and obviously distinguish the difference between the two?
Yeah. All right. So we'll start with money, because money is basically an instrument that we use to transact goods or services. So it is anything that we think holds value. So it could be me offering to fix your lamp. That is a form of money in its core, as well as you offering me a goat. If I need a goat, that is a form of money. So the way money essentially was established was a form of good or service that you can give to transact with another person or item or whatever it is you're looking for.
Okay.
So money is then the tool that you need to run that instrument. Currency. Currency is the tool that you need to then basically drive the act of what money can do for you. Okay. So a currency, as we know it, is a US dollar. A currency is a Indonesian rupiah. It's what we know as these are the things that we can give, a transactional good that I can give you for giving me something. So the currency is the item that we can use, and money is the underlying value. So it's any currency is only considered a money if we can agree, if the person on either end of the trade or the sale can agree that this holds value. So that's essentially money is the item or the good that is valuable, and currency is what exchanges the value.
Okay.
I think that's the only way I can really explain it without going into too many depths. I hope it makes sense.
It's a great explanation, man. As I say, I never knew there was a difference between money and currency, but it makes perfect sense. So I really appreciate you defining that for us in a very simplistic way. Right. I'm sure everyone will understand what you're talking about. So why, now that we've got the description, now we know a little bit more about money and currency, why are money and currency as we know it in danger now more than ever in our lifetimes?
I would say money is not, because money is something that it will always be there. It just is. Money is the underlying thing that we say holds value. So it doesn't matter if today it's US dollar, tomorrow it's gold, the day after it's Bitcoin, the day after that it might be something that doesn't exist yet. We don't know. But currency, as we know it, anyone who's alive right now will never have lived in an age where we transact in animals or in bits and pieces of gold or anything like that. We're all used to the US dollar, the British sterling pound, the euro, the Danish kroner, the Indonesian rupiah, the Thai baht, all of these different currencies. And that is currently, it's under a lot of pressure. Under a lot of pressure right now. And the reason for that is because, again, they only hold value because we agree they do. So instead of you basically, if you need a lamp fixed and I've got a goat, you'll say, okay, oh no, sorry, you've got a goat and you need your lamp fixed. You'll tell me, look, I need my lamp fixed. You can do that. As payment, I'll give you a goat. Instead, I might not need a goat right now. Maybe I do in the future. So instead, you'll say, okay, here is $100. This is the value of one goat. We agree that the transaction we're making is worth that value. So whether it's $20, whether it's 100, whether it's 50,000, doesn't matter. We've agreed that the value is there. So right now, because of coronavirus, a lot of people have been out of work. They've not been allowed to go to work, even if they've kept their job. And because of that, we have needed economic stimulus. So stimulus is literally just the people who create money are printing money, both in paper form and in digital form. So in digital form, it's just central banks who are typing in a bunch of zeros, and boom, there you go. Money's created. No one really knows about it until it goes into the system or trickles down through the financial system from the top central banks all the way down at the very end of the day to the consumers, which is us, the people who spend money every single day to stay alive. And the issue with that is that because of all that printing, at the end of the day, it's somewhere value is lost. Because if I have, let's say there's $1,000 in the world, right? Just pretend there's 1,000 in the world. You've got 10, I've got 10. That means we both have 1% of the total global US dollar value. But if the Federal Reserve in America, who control the money system, basically, they print another 1,000, then we each only hold 0.5% of the value. So in theory, you would think that leads to inflation, but because of everything that's going on, there's almost a deflationary aspect that's happening in the background simply because everyone wants US dollars. And that's because currently it's the global reserve currency. And that's literally just decided in trade. 70% of all transactions that happen worldwide are in US dollars. And you and I might not think that, because if I'm in Bali, I'm never really shopping in US dollars. If I'm in Germany, I'm never really shopping in US dollars. But we're not trading services and goods in big enough values to actually make up even 1% of the global spend. So 70% of all major transactions, so this is companies trading oil, trading wheat, trading silver and gold, iron ore, natural resources and value, is taking place in a trade market that's established in a US dollar backing. So we all just agree that this is worth, one barrel of oil is worth, let's just say right now, I think around 25, 30 US dollars. That's just what we agree on. And it doesn't make sense. If I'm from Denmark, I'm not going to tell you, oh, you're from England, so we're going to trade yours in British pound, mine in Danish, and then we have to meet somewhere in the middle. Everyone has just agreed that US dollar is currently the reserve currency. And the issue is everyone is printing money. So everyone wants their hands on US dollar because that's where the power is. I don't know if I'm going a bit too far maybe already. But yeah, the main reason that we're at risk right now for a monetary collapse, I would say without going into history, is because there's just too much money being printed and there's too much debt. And technically speaking, the debt will never get paid back. Yep. It just simply never will.
Because every time, as far as I'm aware, every time they print $1, technically the US then owes money to the Federal Reserve. So they're basically printing debt every time they print money. Is that right? Simplistically?
Yes. And also, there's a difference between the central bank creating money and the Federal Reserve creating money. So the Federal Reserve, they're upping their balance sheet. And then the US government, they owe the Federal Reserve money. Mm-hmm. So the US government, they're getting money from the Federal Reserve. US government are also allowing central banks to just print, 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 print. They just keep going, keep going, keep going. And then they owe money at the end of the day to central banks and to the Federal Reserve. So there's just a whole lot of borrowing going on, and there's never really anyone paying back. And it started as something called quantitative easing, meaning we're going to release quantities of money into the economy at a slow rate. So there's never that inflation. There's never that, oh, now there's double the money on the market, so your spending power is cut in half. It's very, very slow, so that you don't really realize it. But at the end of the day, people at home are getting a little bit of money in their pockets. And that's why every single year, usually most governments try to aim for a 2% inflation rate every year, 2 to 3% inflation. So with that inflation, that means that if I have $1 today, next year, that dollar will only be able to buy what was worth today, 97 cents or so, but I'm probably also getting paid $1.03. So with inflation, there's also growth in the economy, meaning I'm going to get paid more for the same service next year as I was this year, but things are also going to cost more next year. So that's why they're trying to slowly ease in more money so that people can slowly pay the consumer more for their work, and the consumer slowly can pay more for the goods that they need.
Right. Okay.
So that project has just completely failed.
Right. Now, there is a term called fiat currency, and I think that's quite an important term because, again, this is just a new term that I have learned in the last 6 months. So can you tell me more, and anyone who's watching or listening, can you tell us more about fiat currency?
Yes. So fiat currency is what we probably all know, which is US dollar, Great British pound, Indonesian rupiah, Brazilian real, Danish kroner, the European Union euro, everything that we know, the numbers we see on our bank accounts, most people, unless you're holding cryptocurrencies or other assets, is fiat currency. So it is the currencies of the governments. It's usually government backed. And the only reason it holds value is because we agree that it does. And just to go a little bit back in history now, these fiat currencies, they are based, there's always going to be the base of the global reserve currency, which is what I spoke about before, which is the currency that's in that time, the backing of trade. So currently it's US dollars. It has been since 1920 after World War I. Before that, it was the Great British Pound. Before the Great British Pound, it was various different currencies of basically the French power at the time. And then it was the Dutch before that, and the Spanish before that, and the Portuguese before that. That's about as far as we know the history. And each of these global reserve currencies, this all came with the introduction of trade. So when ships essentially could sail from continent to continent and trade goods and services, and agree that for this service, we're always going to be paying in the currency of this country. So dating all the way back, Portugal was from 1450 to 1530, lasted for 80 years. The Spanish was the longest one, lasting for 111 years. And then the Dutch for 78, French for 95, the British pound for 105, up to 1920. And now from 1920 to today, about 100 years, the US dollars has been the global reserve currency. We've never seen a currency last as a global reserve for longer than 111 years.
Okay.
And that was when things were a lot less complicated.
And now we're getting very close to that, which is why
we're 11 years off from a first time ever that a global reserve currency has stayed in power as a global reserve currency, where everyone agrees that this is the underlying currency that we all trust. We all believe this is going to be the strongest currency, and we trust the people behind the currency. That is coming up to the due date. We're getting real close to that point where people are going to start going, so what's next?
So on average, change is potentially coming.
Statistically speaking, change is well on its way.
Yeah. Okay. Yeah. Now, because one of the things that I learned, and this is a great resource for anyone who wants to find a really simplistic series about the history of money and the hidden secrets of money, which is the name of it. It's actually called The Hidden Secrets of Money, which you can find on YouTube. It's a great series.
Amazing series.
It's really, again, it's very simplistic. It teaches you about the history of money, and you come away knowing a lot more about things like the fiat currency, which is really important. One thing I love about the US dollar is it started with was it the gold standard? So for every $1 US, equated to how much gold? Was it like 1 ounce of gold?
Well, it was the value of gold in US dollars. So at the time, it was backed until I believe 1933.
Yeah.
That's so from when the US dollar came into power in 1920 up until 1933, it was completely backed by gold. So for every US dollar there was in circulation, there was X amount of
Gold
gold
in the bank.
in the bank or in a vault, which equated to the full market value of US dollars. So of course that depended on what the traders of the time agreed on what the value of gold was.
Yeah.
So if gold went up in price, the US dollar was stronger. Or they would be able to print more to keep that backing. So if the world agreed that gold,
I think at one point in time you could actually physically go into the bank with $1 and exchange it for one piece of gold. You know,
yeah, for the equivalent gram or whatever. It wouldn't have been a whole gram, but yeah, you could have gone in and traded the value.
And then I think so. Obviously, they were printing money at the same rate as they had the same amount of gold. And then it got to the point where I think the US dollar became then a third of the amount of gold, or 3 times the amount of gold
that was 1933, I think, until 1971.
Right.
That's when they said, okay, we don't need all the gold. Let's make sure we have at least 1/3 or 1/4 of all the value we're putting out. We have at least that in case doomsday comes and 33% of all people in the States say we want our gold, then we can give it to them and we'll be okay.
And then as far as I'm aware, as far as I'm aware, the world became, all the world leaders and the economic systems became aware of the fact that America were just pumping out more money than they had gold. So the entire world started sending back the dollars and saying, well, give us the gold in exchange of the value that is represented by this dollar. America obviously had printed far too much money, so they couldn't give out the gold to recreate the monetary system.
Yeah.
So.
Yeah, that's correct. It's a fun, and that's, you could really go back and say, well, who fucked that up? Like, that was really the beginning of the end for the US dollar, right? Because it was backed by a hard asset, something that you can't just print in a machine. Gold has an underlying cost to it. So you need to get gold, you've got to pay miners, you've got to have the infrastructure to build the mines, to actually use the mines, to refine the gold, go through the mint, getting it stored. Everything has a cost. So gold, you can say, well, there are transactions involved with keeping gold.
Yeah. But
there is not a single transaction involved in a banker going $1 trillion.
Yeah.
Ding, and then boom. Like, what the fuck is that? I'm sorry, pardon my French, but that is just
you can say whatever you want here, son.
Yeah, boy. But yeah, it doesn't make any sense. And it seems that the whole world has just agreed that you know what, as long as most people don't understand this, we're going to be okay. As long as most people don't question what the hell is the value of the US dollar, we're going to be fine. It's fine if all the people who have a lot of it know, because they just need to make sure that the bottom feeders, we don't know, we don't understand it. We're just working every day to try to get this money that we have been told, you need to make X amount of dollars to put the food on the table every week. Yeah. That's what we understand. And funny enough, they don't teach us this in school. We have history. We didn't learn anything about the history of finance, anything about the history of gold, history of economy, history of trade. That was always in the Italian reunification stuff. Maybe you heard a little bit about how trade routes were involved and how they became a political or an economic factor, but it was never, okay, let's dive into how much value this country or unified nation had versus another, and that's why war started. And then, it went from the Spanish to the Dutch and from the Dutch to the French and so on. We were never taught that. Yeah. We were never told anything about this. It's the same with taxes. We're just taught how to do a bunch of algebra and learn about history that, yes, it's important to know, but
don't find it too much, because then it becomes powerful. Knowledge is power, man. Then you can fight back with knowledge,
Yeah. But you could argue that it would probably have helped us more as individuals to understand about what's actually going on behind the scenes.
Critical, absolutely. Now more than ever, man, I find it's very critical to be taught.
It is.
Obviously, we're seeing governments right now around the world, America, specifically the Western countries, America, the UK, Australia, and they are pumping out money. They cannot print enough money at this point in time. So obviously, the more money they...
Just to put it into perspective, it's I believe the central banks around the world, and including the Federal Reserve, so this is mostly the European Central Bank, which is its own, no one really knows what's going on with them. They're kind of their own governance. European Central Bank, the Bank of Japan, which have been shady for a very long time, doing kind of their own thing, and the Federal Reserve, and then the Bank of Great Britain, they have combined, I believe, in the past 2 months, lifted their total balance sheet by $6 trillion US dollars. Six
Wow.
trillion. And I'm pretty sure that's a doubling of what the total debt was before coronavirus hit. So because of this event, everything was just going downhill prior to this event. Then this happened. And, if you know anything, or not know anything, but if you've had any interest in all of the markets and anything from housing to crypto to equities, any of that before, you would have seen we were in sort of an everything bubble. Like 2008 was the housing bubble. Before that was the dot-com bubble. We had built up to be this everything bubble where a change is needed.
Yeah.
And COVID was honestly just like the rocket launcher that, it wasn't a pin. It wasn't a pin that popped the bubble. It was a bazooka. It was a tank.
Wow.
And all the markets have just been hit. And because of that, no one is questioning the central banks, the Federal Reserve. No one is saying, oh, you guys should stop printing because this isn't going to be good for our debt balance sheet.
Mm-hmm.
Where 6 months ago, people would have said, are you insane? How are you printing so much money? How's no one arguing with this? Where now they're like, we need more stimulus packages. Just yesterday, Japan announced another 1.1 trillion yen. Just out of thin air.
And just creating money.
Thin air.
And obviously this comes with pitfalls. They're obviously having to do this to send out stimulus packages for people who are potentially unemployed or can't go to work with the stay at home.
Absolutely.
Obviously a great short-term fix, keeps the people happy, keeps the people from finding out more information, but obviously long-term, that leads to dangers. Now, do you think with this situation, could this see the collapse of the monetary system as we know it right now?
I'll say yes and no. I'll get into that in a second, but before I do, I will just touch on that short-term positive thing, because it's not all currently, I think about a month ago, a couple of weeks ago, the amount of money that had been printed in the United States alone equated to every single American getting $6,000 US dollars cash. This is kids from 0 up to people aged 100. You know what I mean? Every single person could have received $6,000 US dollars in their bank account. That hasn't happened. People, if they could figure out the system, have gotten $1,200, and a lot of people now are getting more payment from benefits that are being sent to businesses to then pay the workers. And to the point where a lot of people in America now are making 20% more on unemployment wages than they were going to work every single day. Now the government's saying, yep, you can open up again, but with restrictions. You can only, restaurants, services, for example, you can open up again, but you're only allowed to seat 30% of the people you were before. You have to bring all the people back from furlough, all the people who are still employed but haven't been getting paid, bring them back from furlough, but you're only allowed 30% capacity, and you're not allowed to fire anyone. So there's no incentive to open things up again. People are much more comfortable sitting at home on the couch watching Netflix, getting paid 20% more than they would if they went to work. So that whole thing with the short-term effect, certain people are benefiting, yes, but the real problem is that all these big banks, the big risk takers, hedge funds, banks, big companies, I'll run through them real quick. So the big things like airlines, right? They have been doing what's called stock buybacks. So they've been receiving money by creating bonds, basically creating a different type of stock. For people who don't really know what that is, you can say, okay, we're giving a guarantee that if you give me $1,000 now, I will give you back when the bond finishes in 1 year or 2 years. I will give you back the $1,000 plus 6%. So it's a guaranteed interest rate on your money. Now, this money that they're getting, it's all built up on fake value. So these companies aren't able to promise that. They're promising it to get cash in, but they're not using it for the right thing. They're buying their stocks back to bring the stock price higher, which actually separates the valuation of stocks from the company value. And the CEOs and the management, they get big fat bonuses because the stock is doing well. Companies doing well because the stock is doing well. So there's already there. the split in where the money's going and where it should be going is completely messed up. There's no balance at all. And you would think, okay, if a company's getting money, they'll hire more people. Those people will get more money. They'll spend more money. It trickles through the system. But that's just not been happening mostly because of stock buybacks. And that's the same for the banks and everything. They're all just trying to inflate their own wealth with the support and stimulus that they're getting. And because of that, it's just not, the money isn't going down the funnel. It's stopping at the people who have the tools and instruments to work the financial system. So the people at the top are just making more money. So all of this stimulus is actually increasing the difference between the wealthy and the poor.
It's creating a wealth gap. They're basically eliminating the middle class and just creating a wealth gap.
Yeah, and that's what's been going on for. That's what's been going on for a long time now, and it's getting worse and worse. And it's because the Fed, they're following a playbook that no longer, they're following all the steps in their book, and they're like, well, we've run out of things to do now, so let's just try to print more. That's the only answer they have at the moment, because this has never happened before.
Yeah,
interest rates have been declining from a high of like 17%, and now Trump is demanding negative interest rates to try to get people to go out and spend to stimulate the economy. But in their playbook, the lower the interest rate goes, the more people spend. But they've never had to experiment with negative interest rates before, because just for people who don't understand, negative interest rate means if I have $1,000 in the bank, normally you would think that, okay, you get a little bit of money for storing your money in the bank. You think 2%, maybe 3% a year. So if I put in $1,000, next year I'll have 1,030. Year after that, I'll have 1,064 or whatever. So it's compound interest every year. But interest rates are decreasing on a government level. So they're saying, look, interest rates have to go down so people don't save money. Make them go spend. Right. Put the money back into the economy. So if I've got a bank with $1,000 in it and they say, you can keep it in our bank, but you're going to have to pay us to keep it there. And also you're not making money from us to store it. We're going to lend out your money, but we're not going to pay you interest to lend it out. So next year you'll also have 1,000. The year after that, you'll also have 1,000. Then you need to take into equation the actual inflation rate of money. So you're better off spending your money instead of trying to save it in a non-inflationary store of wealth, which is money.
That's pretty scary, man. That's a pretty scary concept.
It's very scary. Yeah. It's very weird. And that's what they just don't know. So, Trump, for example, is very keen on dropping interest rates to minus. Denmark, actually, one of the countries that's already done it. And in Denmark, it's kind of working because banks are still setting their own rates. I don't want to dive too much into it. I don't know enough about it to say too much. I can't promise anything. But it's definitely something, again, most people don't think about it. They see interest rates as, oh, this is what I have to pay to take a loan. But it goes way far beyond that. It's all about, where does the money go in the system? Where does the top 1% want the money to go in the system? And how are banks trying to push it into the system? That's what interest rates are designed to do.
So could you see the collapse of the monetary system, the one that we currently know and the one that we brought up with?
I don't think it's a if, it is a when.
Right, okay.
Because I just don't see that with what's going on right now. It's so weak. I don't think, it's just so brittle. Everything seems to be falling apart bit by bit. Currencies around the world are getting devalued against the US dollar because of COVID, because trade has stopped. The supply and demand curve has just gone to zero for 2 or 3 months. Never seen that happen before, ever in history. So yes, I do think it will collapse. It's just a matter of how many yellow cards are we going to be able to give the Federal Reserve before they finally get a red and the world decides, fuck the US dollar. We don't trust it anymore.
So we could we potentially see the death of the dollar? Could potentially see the death of the dollar? Or we
could see the death of the dollar as we know it, but I think before then, and I know this is happening at the moment, is banks around the world and currencies around the world are tokenizing. So they are building into digital form. So they don't need to be backed by an underlying asset as such. They need to be backed by something, but it's going to be in blockchain status. So there's not going to be as much. It'll be more regulated in what should have been an unregulated world in terms of money, but they're not going to be able to print out of thin air in the same way they are now, because it will be on blockchain. Yeah. At least this is my understanding. I don't know enough about digital currencies in terms of what central banks are doing, but I do know that big banks, central banks, are hiring people who previously worked in cryptocurrency companies to help them design the blockchain. So I think before the US dollar as we know it completely dies, I don't think the Federal Reserve will let that happen because it is the superpower of the world at the moment. There's no argument. It just is from a financial standpoint. It is. Um, Before anything happens to that, I do just think that it's going to go into a digital form. So I think cash, $100 bills as we know it, will become obsolete. And
Okay,
we
so that
won't
was the
need
next
them.
thing I was going to ask, man. If the current monetary system and the dollar was to collapse, do you think digital currency or potentially cryptocurrency could replace it?
I think it will be a cryptocurrency because it will be cryptography based. It will be based on a blockchain because it is the world needs a new development. I see blockchain and cryptocurrency as the biggest and most significant technological innovation since the internet. So if you look at emails on the internet, everyone also said, well, we don't need that. How does it work? What is the internet? You go dial it up and everyone remembers anyone from the 90s, born in the early 90s will remember ADSL and stuff like that and how you had to dial in the internet and call up and stuff. That was already advanced. Internet came out, I don't even know when it came out. Probably, I think the first iterations of it were in the 60s or 70s for all we know. But there was that whole technological innovation has changed our lives. And then came email, and we were like, why do I need email? I've got mail. Mail works just fine. Well, not when you just need two people to be working together across the globe and you need answers immediately. Everything takes time to kick in. And I think cryptocurrencies are, without a doubt, in my mind, my opinion, the next thing. And I imagine the next question would be, do you think it could be Bitcoin? Technically speaking, yes. Or theoretically speaking, it could. I don't think it will. I think Bitcoin will have a good run, and I do see it growing. I see it as I see it more as a new hedge against money and printing, because it can't be printed. Bitcoin can't be just printed into oblivion. There's no one pressing buttons behind Bitcoin, um, among many other cryptocurrencies. So yes, cryptocurrency could and very well most likely will be, but I don't think it will be Bitcoin as such.
Okay. So obviously we've spoke a lot about the monetary system, the dollar, how it's become this massive melting pot. You've obviously thrown the coronavirus, potentially heading towards a depression or a recession. So because of all this, is this why, obviously this is why I got you on to talk about cryptocurrency and Bitcoin and potentially investing. Does this make this the best time to not only invest in Bitcoin and cryptocurrency, but the best time at least just to educate yourself and invest the time into educating yourself on these things?
I 100%. There is no time as good as now. Yesterday would have been the same. Day before that would have been the same. The sooner people can understand even just a tiny bit about what it is and how it's going to stay, I think the better for the world. Like it's just going. We just need to make people understand that you do have an alternative. Like for example, in Brazil, people are they're losing so much money right now just staying in their own currency. I was actually supposed to shoot a wedding in Brazil, or not in Brazil, sorry, in Bali, but a Brazilian couple, and they've told me that they may no longer be able to do it because their currency has just completely tumbled versus the US dollar. And I straight up told them, look, you actually have access to stable coins, which is a digital form of US dollars built by currencies, or built by blockchain companies. And they hold one US dollar for every US dollar they have in digital form. And you could also hedge yourself in Bitcoin or in other cryptocurrencies. So there are ways to get out, but people just don't know about this yet. And it's I don't know if it's because mass adoption is a very, very hard thing to reach, especially at the scale of human growth and the amount of time we generally give to something new. We typically will shrug it off after 2 minutes, because like, oh, I don't understand this, whatever, on to the next one. But for sure, there's now is a good as time as any,
Yeah.
to get involved in this and to get at least a little bit of an understanding of what it all is.
Now, to give us a better understanding, why don't we start with Bitcoin? Because to many people, Bitcoin might just be this fantasy. It could just be this, this fantasy. And
the way I've heard it in podcasts is, most people don't know what it is.
Yeah.
And this will be the older generation specifically. They would describe it as fake internet money used to buy drugs and weapons. Like
Yeah.
that's what everyone sees, and that's because I think that's probably because its first mainstream kind of headline was for the Silk Road, which was shut down, and a lot of stuff was traded on there for Bitcoin because it was at the time considered more anonymous than US dollars, and you didn't need to have your name or anything on it. You just had a little address, which was your Bitcoin address, and you could send transactions, and it would be a certain value, and then they could then sell it in their currency for whatever it was, US dollar. But the Silk Road was notorious for drugs and other black market items, and Bitcoin unfortunately was one of the things that ended up being the I suppose like the finest tool of trade in that, because it was harder to denominate than it was if you were sending a bank transfer to someone for buying a gun.
Yeah.
So unfortunately, it was put in a bad light from the very beginning. But yeah, let me sip of water and
Take your time, man. You're going full steam ahead, so I take your time. And the next question was going to be when was Bitcoin created and who actually created it? Because I know there's a bit of a stigma around who created it, or a bit of mysticism about who created it. So why don't you tell us about that?
So I'll go back to the other one first about what it really is, just to give people an understanding of why it has value. Of course, it has value because if you and I are interacting and trading with Bitcoin, we agree that certain value, what it's set, that's what it costs right now. If I buy it today and I sell it tomorrow, it'll most likely be around that price range. So there are other people anywhere else in the world who agree that's the same price. So it is, therefore, in my opinion, a form of money, right? It has the underlying value that we all agree upon, and it is a currency which is transacting as a form of value and money. And what Bitcoin really is, without going too deep, is it's a peer-to-peer decentralized network built for exchanging value. So peer-to-peer means that there's no one in the middle. So if I'm sending you money right now on a bank, I'm sending it to my bank, or from my bank to your bank, and then you receive the money. So there's my middleman and your middleman. There's cuts along the way, and we're paying Visa, we're paying Swift, we're paying MasterCard, we're paying all this and that. So with Bitcoin, you have a Bitcoin address, I have a Bitcoin address. I make a transaction, I'll send you, let's say, 1/10 of a Bitcoin. You receive maybe 0.999999999, whatever. And the only thing we pay is to the people who are putting up their computing power to transact the Bitcoin.
Okay.
It's hard to explain simply, but basically it's a network of internet and computers which are all verifying transactions all the time. And hashing power is what generates the blockchain, the information on the blockchain. And there's a pretty good analogy I heard, which is basically the way Bitcoin works is that it's the blockchain on Bitcoin is 1 megabyte block. So it's 1 megabyte of information. And then there's another 1 megabyte of information, which refers back to that one, and so on and so forth. So that's why it's blockchain. It's a block of data tied to another block of data, tied to another block of data. So you can never go back and destroy information. It's there. It's on the blockchain. It's on a ledger. You can always see it. You can always find it, but you can't destroy it because it's printed in reality. It's in a public ledger that no one has access to, because there isn't one person who is the king of Bitcoin. There isn't like one central banker who's like, okay, today we're going to make some more Bitcoin. It all works in a very natural way, and it was designed now to get into. Oh, sorry, quickly before. The way it works is that you have, go into that after. Designed by a person or an entity called or referred to as Satoshi Nakamoto.
Satoshi Nakamoto.
Satoshi Nakamoto.
I like that name.
So yeah, wonderful name.
And is this a person, or is this, as far as I'm aware, no one really knows who this Satoshi Nakamoto?
No one really knows, and it's probably the greatest thing that has ever been created without anyone taking credit for it.
Right.
So people have tried to take credit for it, but just recently, the best one, one of the people who's tried to take credit for it is a guy called Craig Wright, and he made his own version of Bitcoin. Basically, on the blockchain, you can create what's called a fork. So if enough people in a group of the people who are creating Bitcoin together, who give the power to mine Bitcoin, they decide, oh, we think it should go this way, and we think it should go this way, the development, you'll have the blocks, and a certain block, they'll split, and it will create 2 blocks, and then they'll be each their own chain going forward. So there was one called BSV, which was a fork of Bitcoin, which is Bitcoin Satoshi Vision. And this was basically the entire believer club of Craig Wright. And Craig Wright claims to be the founder of Bitcoin, and he claims to hold the first 1 million Bitcoin. He says he has 1 million Bitcoin. There have been lawsuits for and against and all sorts of shit, but basically the last, I think it was 2 days ago, there was someone who made a transaction of some of the original 50 Bitcoin that was printed in 2009, or mined in 2009. This transaction had code in it basically saying that Craig Wright was not the owner. So the people or whoever was behind the original Bitcoin could prove that Craig Wright wasn't the original Bitcoin founder because they had the first blocks and said Craig Wright is not the guy who's got it.
Unless he's just messing with you, maybe Craig just put that in there just to kind of mix things up.
Yeah, but I just don't see it.
Yeah.
I don't see it. He's too much of a prick, to be honest.
All right, okay.
Too much of a prick.
So when was
Bitcoin is too good.
When was the birthday? When was the birthday of Bitcoin?
Exact date I can't tell you, but it was post collapse in 2008.
Oh really? I thought
so it was in 2008. Huh?
Was it 2000? All right. So after 2008, after the recession in 2008, it was created.
Yeah, 2008 was a Genesis block, which was the first block, and basically in that block, again going back to the blockchain information, it's basically coded in that block that it can't be stopped. So it always keeps going. Right. It's in that initial bit of information, so the Bible of Bitcoin, basically, that once this code is started, it can't stop. It just continues.
Okay.
It continues and it interacts with all the people who are willing to give power to the network. So people who sit with a computer or have a mining farm. It's a bit technical, but basically it's stated in that block that it's going to continue forever. Like the Bitcoin network will continue unless all people decide Bitcoin goes to zero and no one bothers to mine more Bitcoin and everyone decides it has no value, or the internet completely stops worldwide, then Bitcoin will continue.
How many Bitcoin or Bitcoins, obviously now, plural, are there available to buy in the world right now at this moment in time? Obviously, you can't give me the exact amount, but how many are available roughly right now?
The amount of Bitcoin that are mined at the moment, that are in circulation as we know it, is in the 18.5 million range. According to certain people investigating, 1 million to 1.5 million of these Bitcoin have already been lost. In terms of people who have stored them on the code on a piece of paper, for example, you can store your Bitcoin code. It will always be on the blockchain, but the code that you have, basically the key to unlock your Bitcoin, people have lost that.
And if you lose it, you can't get it back. It's not as if you can like reset your password with an email. Once you lose it, it's gone. Is that it?
It's gone. Yeah. Now there are tools you can use to store your Bitcoin in a different way. And there are plenty of ways to store your Bitcoin now. Back then, it was obviously a lot harder because it was so new. And I don't think anyone who started Bitcoin probably wouldn't have guessed that this is where we were going with it. So it wasn't really the do or die. Back then, 1 million Bitcoin may have been worth absolutely nothing.
Yeah.
If there wasn't a transaction on a physical transaction, something for something, then it would have had no value before.
So how would you store say you're 1 Bitcoin right now, how would you store it? What would be the most safest way to store it in case you lose?
The safest way for the average person, the everyday person, would be on a hardware wallet. So that is basically a USB key where you can put your Bitcoin on there and it's yours. No one can take it from you. No one can hack you. They would literally have to physically come to you, take it from you, and also get access to your private key. To get access to that Bitcoin, they would then have to send it to their own account. But no one, it doesn't say like, oh, this 1 Bitcoin belongs to, Jamie or Jonas or anything like that. It's just a key. So there's no real tangible thing that says you have a Bitcoin. It's just on that hardware wallet.
Is that is that as physical as a Bitcoin ever gets? Then you can't go around with a big shiny Bitcoin and say, I've got
No,
that.
you can't. No, those are more memorabilia than anything. There are, of course, I'm sure there are Bitcoin memorabilia that are worth one Bitcoin because people say this has the value of one Bitcoin. But generally speaking, that would be the most physical way. Otherwise, you can store your private key. Basically, it is just a private key. You can store that on a piece of paper. And then you have a seed phrase, which is not sure if it's the same for Bitcoin or if it's just Ethereum, but usually there's a seed phrase, which is what you need. It's kind of like your backup. So you have, for certain coins, it's a list, it's 12 words in a specific order, and these are 12 random fucking words, like you cannot guess them. And then you have your private key. That's what you have to gain access to your Bitcoin.
Okay. So now, obviously, as you say, there's around 18.5 million Bitcoin in circulation right now. Will there continue to be more and more, or is there a cap on the amount available?
There is a cap. The cap is 21 million Bitcoin. 21 million Bitcoin is where it will cap out. And at the current rate, with the amount of Bitcoin that's being created, at the current rate, Bitcoin should stop generating more, or at least significant enough value to care about it, in 2140. So in the code, it's written, so it's written that for every block that's generated, the people who are providing the computer power to help generate that block are being rewarded in Bitcoin. And every 4 years, the reward for that block gets cut in half. We've just gone through one about 2 weeks ago, 16 days ago. There was a Bitcoin halving, which means that for every block of Bitcoin, there was, or every block, which is every 10 minutes, by the way, each block, 1 megabyte block, is designed to take 10 minutes to be created. For every block, you get, I believe it was 12.5 Bitcoin before, and now it's 6.25 Bitcoin. Okay. So obviously, the value of Bitcoin needs to go up in order for people to keep being interested in offering the power to keep Bitcoin going. Okay. So in that sense, it's a bit of a self-fulfilling prophecy, and it's very much a supply and demand thing, because the cost of one Bitcoin, I think last I checked, it was, all depending on power, where you are in the world, but average wattage kilowatt per hour, it was between $5,000 and $8,000 to generate one Bitcoin in computing power.
Right.
So and that's just the price of the electricity.
Right. Okay. So what I mean, when you talk about mining Bitcoin, obviously when you think about a miner mining for gold or silver or whatever, you imagine a miner with a pickaxe, a head torch, down in the mines, physically doing it. What does a digital miner look like, and how are these Bitcoins created? Obviously, I know it's probably a very complex system, but if you can give us it in the most simplistic way, what does a digital miner look like, a Bitcoin miner look like, and how is it done?
Digital mining happens through computing power. So it's GPU or CPU powered, depending on what blockchain it's on. I understand more the general of this. I don't know anything really about the technicalities behind mining. But to give you an understanding of what the mining is and how it works, imagine there is a Sudoku. So there's a Sudoku that needs to be solved. Mm-hmm. And there's 10 computers available mining this Bitcoin or completing the Sudoku. 10 of these need to complete the Sudoku in 10 minutes. So what Bitcoin does, the Bitcoin code is designed to consider how many miners are currently trying to solve this issue to create this one block, and then it adjusts the difficulty of that Sudoku for the amount of miners. So in its simplest form, you could say there's a classroom of 10 people trying to solve a math problem. And then the teacher, Bitcoin, says, okay, there's 10 of you. I think you'll solve this in 10 minutes. If tomorrow there's 100 people in that class, the teacher's going to say, okay, there's 100 of you. It's now going to be this difficult. And with this difficulty, it will also take you 10 minutes. So it's designed in a way that it knows how much power is being given to the network for every block of Bitcoin. And then it adjusts the difficulty based on how much power is being given. So the miner is bits of computers. So you may have heard of the term mining farm. China owns a lot of mining farms. that basically looks like a server room. It's just stacks of metal boxes with a bunch of lights and a bunch of cables, and they're all just basically offering power to solve a problem on the Bitcoin algorithm to generate this block. The computing power that then solves the problem, they're rewarded for, I guess you could say, if I was one of these 100 computers, if I was a student in the class and I solved 1%, I get 1% of the block reward. So the block reward has just gone from 12.5 to 6.25. So if I'm every day solving, every 10 minutes, if I solve 1%, I will get 1% of that block reward. That's in its simplest way. That's how you could say it.
Welcome to the future. That's how you mine in the future.
Yep. You just have computers doing the work for you, and you pay the electricity to make the computer solve the equation. Obviously, these are very, 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 very complex equations, and they're designed to be exactly 1 megabyte of data, and they're designed to take more or less exactly 10 minutes based on how much, it's called hashing power, goes to the network, and then it adjusts its difficulty based on how many people are trying to solve it. Now, it's also changed over time based on, obviously people are building better performing processors. So companies are able to build a processor that is able to mine at a more efficient rate, or maybe it's able to mine at a less cost, like a lower cost. So think of a car, like a car engine 50 years ago and a car engine today. We have Tesla today that uses zero fuel, only electricity. And then 50 years ago, it was probably chugging along at, a gallon a fucking kilometer. So things are getting smarter and more intelligent, and these companies or individuals who are able to put in the cost. Obviously a Tesla costs more than a car from the 50s would, if you're not getting a collectible, but people who are willing to pay more for the better equipment, they're more likely to get more of that Bitcoin reward. So they run their business by, like, there's two completely different businesses to Bitcoin. There's the trading side or investing side, and then there's the mining side. So the people who mine, my only goal would be to get 1 Bitcoin at a lower cost than the market value. So if I can keep giving computing power, and after, let's say, 1 week, I get 1 full Bitcoin, then if my electricity bill is less than whatever the Bitcoin price is right now, I've made money. So they're working on the margin, on the profit margin of how much my electricity costs versus how long it took me to get the value in 1 Bitcoin. Does that make sense?
It makes perfect sense, man. Very clever. And a great way to explain it, man. So I really appreciate that. That's a very good explanation. And it's fascinating.
I hope it, I know you know a little bit about it now, so I hope it's not, I really do encourage people, even if I scared you a little bit there, I'll definitely give you some resources after. I'll let you know who you should listen to explain it better. I did take a lot of these analogies and bits and pieces of certain people I've heard, and obviously every time you get information and you pass it on to someone else, it loses a bit of value every single time. So I will, at the end of this, we'll tell you who you should listen to and stuff, but I hope you stick with us, even if you're scared off at the moment, to anyone who's listening.
You're doing a very good job, man, of keeping it simplistic, which is very important. Again, we're appealing to the people who are beginners or who have little knowledge of this subject. So now I mean, as much, you can only do as much you can do, because obviously Bitcoin is a complex system ultimately. So
it's a very, very complex system. Very, very complex.
One thing I just want to say about Bitcoin is, obviously we keep talking about how this could potentially be a great investment at this point in time, more than ever. And now that you've talked about the fact that by 2040, we could see 21 million. 2140, sorry. And you go back in time for that.
2140, yeah.
We will see the final amount of 21 million Bitcoin in circulation. The difference between that and the current monetary system, obviously they can just generate and pump out money as and when they please in this current situation. The good thing about Bitcoin is once 21 million is made, that's it. It's done. You know what I mean? There's a finite amount. So is that what potentially is a great investment? Because obviously you could go down supply and demand, but there's only ever going to be 21 million.
Exactly. So the interesting thing with that is, again, Satoshi Nakamoto, whether it be a man, a woman, or a group of people, praise to them, because they designed it around the other thing that we all understand as a physical asset, which is gold. Gold has always been a finite good. We can only go in and mine, like you said, go in there with your chisel and your axe, and you have to come out and you have to polish it and you have to refine it and you have to pass it on to someone who then says, yep, this is X amount of carats, blah, blah, blah. There's only a certain amount of gold in the world. So the way Bitcoin was designed, and gold typically, again, is inflationary at around, can't promise you this, I think 2% again. So again, what the Federal Reserve wants to have the 2% value every single year increase, similar to what gold is increasing every single year. But gold is decreasing because mining is getting harder. We have to start digging deeper and deeper to find the gold. We got to go into hotter areas and we have to pay more people in labor because of inflation. So gold is getting more expensive to mine and it's getting harder to find. But at the current rate, Bitcoin, I think with this halving that's just come, Bitcoin is hitting an annual inflation similar to gold. And after the next halving, so in 2024, Bitcoin will actually, at current projections, Bitcoin will become more scarce than gold. So there will be less Bitcoin entering the world every year relative to its current amount than gold does. So it's a really interesting path that we're going into now. Yeah. As a lot of people describe Bitcoin as a digital gold, and you'll have so many gold maximalists saying, fuck no, and you'll have so many Bitcoin maximalists saying, fuck no, it's way more than that. But for the people who don't really know what it is, you could consider Bitcoin a digital gold. I think that really is, I've not found a better way of explaining it, because some people say, oh, it's supposed to be digital cash, and that's essentially what it was designed to be. But truth is, when Bitcoin goes up in value, you still have to pay a little bit of Bitcoin to transact Bitcoin. So if I'm sending you Bitcoin, it costs me a certain amount of Bitcoin, which is, by the way, the denomination is Satoshis. So for US dollars, you have cents. Bitcoin is Satoshis. So it's one Bitcoin plus, I think, 8 zeros. Each of those, if you have 0.000000001 Bitcoin, that's one Satoshi. And that's also designed in the code, when need be, if Bitcoin one day scales perfectly and does become the global reserve currency, I think Satoshi, it's in the code that one Satoshi can further be split into something that I don't know what's called, but it can go even further if need be.
Interesting. So Satoshi could be
the
equivalent of $1, and then you're looking for the cents. So potentially we could get a dollar and cent. Satoshi's the dollar. We're still looking for the cent. That could happen.
Yeah, I mean, and currently it's the Bitcoin is the dollar and the Satoshi is the cent, right? So right, okay, it's just a much different, a very different denomination. Can you quickly remind me the question again? Because I think I went off tangent there.
No, I'm just talking about the question, or the point I was trying to make, man, is when you compare the current monetary system where they can just pump money into the system as and when they please, as and when they need it. With Bitcoin, it's finite. It's only going to ever be 21 million in existence. Yeah. And even then, people may lose it. So naturally, the amount of Bitcoin available will decrease.
Yeah. It's a deflationary asset it's inflationary because year by year there's more of it, but it's deflationary in the sense that versus basically everything else that we know and understand, less of it is coming into the economy, into the system, into people's hands every single year, every single day, basically, or every 4 years, to be completely politically correct. But yeah, I do see in that sense, Bitcoin was designed to be cash, but it is more gold. That's the tangent we were on. That you would compare it more to gold just because of the inflation rate and because of how people are starting to see it more. And again, a lot of people will disagree here, but as a storage of wealth. It's easier for me to store $10,000 in Bitcoin than it is to send you $10 worth of Bitcoin, because the transaction time is a bit too slow. And I can go into a shop and pay with Bitcoin, but if I'm doing that, I'm not paying directly with Bitcoin. I have maybe a card where I have one, like, let's just pretend there's one Bitcoin on there. If I'm buying something for $10, it's going to sell $10 worth of Bitcoin at a market value made by the supplier. So for example, Revolut is a good, I know you want to get into this as well later on, but just for the timing, Revolut, if people know it, it's like a good travel card. You can have Bitcoin on Revolut. And if I only have Bitcoin on my Revolut card, no dollars, no nothing, I can go into a shop and still go beep, and it will literally just transact the Bitcoin into the currency I'm paying in at that exact moment in time, the rate plus maybe 1% that Revolut takes as a fee for having that service available.
Wow.
So there are other cryptocurrencies, which I also know you want to get into, which are made to transact better. Yeah. But yeah, in terms of finite supply, that is why Bitcoin, and back to the investment thing that's what you were on before. it can be considered really, 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 really powerful investment if you believe in it, because there's only so much of it. You can't keep printing it. And if more and more people believe it, like think about the fact that not even 1% of the world has ever transacted with Bitcoin, has ever, really looked into it more than just hearing about it once or twice, maybe. Not even 1% of the world. If even just 2 or 3% of the world hear about it, that's huge. And if they start transacting with it, that's even bigger. For perspective, the total value of cryptocurrency, of Bitcoin, is at today's price, I think around 180 billion US dollars. And gold market cap is about, I haven't checked for a while, but about 7.5 trillion US dollars.
Shit.
That's a big gap.
Huge gap.
Very big gap.
And that will close. You see it closing?
I don't. I don't care to venture a guess that I want people to hold me to, but yes.
Okay. And that's a huge gap.
I don't want to say yes.
Again, it's all speculation.
Yes. I don't know if it'll be in our lifetime.
Yeah.
In a speculatory sense, I do believe it will. It will get up there because it's easier to store and easier to transact than gold is. Because I can just go boop, send it to you and you've got it. Where if I want to send you a gold bar, it's like, okay, well, got to call USPS and make sure there's a guard on duty that day and take it out of the vault that day. Or if I have it at home, I have to make sure I can bring it to you without getting killed. Like, it's a different type of value, and there's no one else holding it but us. So in that sense, I think Bitcoin is a better store of wealth, but in order for it to really become that, we need more people to agree that it is. Because it only is worth what we agree, plus the electricity, of course, that it costs to generate it.
What was the value of one Bitcoin when it was first created?
It was the value of one Bitcoin. There wasn't really a value of Bitcoin before the very first transaction in the world took place with Bitcoin.
Right.
Which was, I know you want to dive into that as well. The pizza celebration day.
That's right. So
the first transaction known, and just remember that Bitcoin is a like 11 or 12 years old now, where gold and other currencies are, gold is the oldest currency we know. I want to say several thousand years. Dollars and stuff, several hundred years. Bitcoin only 11 years, but the first transaction that we know that took place in Bitcoin, which happened 10 years ago recently. So that means it must have taken a year and a half or a year to a year and a half before Bitcoin actually gained a real value, before you could ever say this is how much it's worth from the day it was created. And 2 pizzas were bought with Bitcoin, and the person who paid, or the amount paid was 10,000 Bitcoin.
So someone bought 2 pizzas on May the 22nd in 2010 for 10,000 Bitcoin. 10,000
Bitcoin.
Okay.
Which today would have been, if I'm not mistaken, around $90 million.
So those pizzas cost $90 million in today's money.
Yeah.
So they are known as the most expensive pizzas in history.
Yeah, they are. And the best part about this is that, because of this decade anniversary or whatever, the guy who actually paid that, he was interviewed or asked, like, how do you feel about this? How, if you had waited 10 years, you would have made 90 million. He had no regrets at all, because that was the Genesis transaction, the first ever transaction that gave value to Bitcoin. If it wasn't for that, maybe someone else would have waited another year or another 2 or 3 years before transacting with it.
Yeah.
Who knows how much of it would have been lost? Who knows if something else would have come along? Maybe something created by federal government that could have, stopped it dead in its tracks before it really became a bigger thing. So that guy, he was happy and proud to be the first person to transact.
And a little bit sick, I can imagine, as well.
Huh?
And a little bit sick right now, knowing what he knows.
A little bit. Probably a little bit. I imagine if he had enough Bitcoin to transact 10,000 for 2 pizzas, he probably had some more stored, or he probably was mining. I would imagine most people back then who had Bitcoin were mining Bitcoin. They were that was an internet project. It was a fun little, cyberpunk, like, actionable thing to do. Like, fuck the system. Like, that's essentially what Bitcoin was. It was a way to transact anonymously. peer-to-peer with no centralization, completely decentralized. No one was saying what you can and can't do. No one is saying what you can and can't buy. It was literally just, I have this, you have this. It's digital. It can't be broken. It is what it is. And we can prove that it's there because it's in blockchain, in the technology of blockchain. So everything was just, it was all based on truth and based on zero trust.
Yeah.
That's the thing with fiat currency. There's trust. We have to trust that the Fed isn't going to go print $20 trillion. We have to trust that my $1 is going to be worth $1 tomorrow. With Bitcoin, you don't need to trust any of that because it's written in the code. It cannot be broken. So it's a trustless, decentralized, peer-to-peer network. Those are the key components to why Bitcoin holds value.
Mm-hmm. What is the value of one Bitcoin right now? Or the rough value?
Right now, let me have a quick look. See, last I checked, it was about 9,100. 9,172 US dollars
for one Bitcoin.
One Bitcoin, yeah.
Oh, dearie me. And I think when you go back to the likes of, 2012 and times like that, the value of one Bitcoin was like $2. So you can see
probably around there. I can actually let you know this chart. Let me see here. Only goes back to 2015. But yeah, if you go back, it's absurd. I think that's because that was only when it started trading on actual platforms where people saw it as having value. But let's say in 2015, September 2015, the high was $243.
The high. And now you're up at 9,000. And what's the highest it's been?
It has ticked $20,000, maybe a little bit over, a little bit under. It depends on what trading platform you're looking at or which exchange you're looking at. $20,000 is interacted.
That's a massive swing, man. So what factors contribute to the swing? Because obviously that fluctuates higher and lower than most commodities and other currencies and stuff like that. So what contributes to that?
Fear and greed, supply and demand. Those are those things are what drive basically every market. As money comes into a market, as more players enter a market, the amount that it will move will decrease. It's still massive potential, like enormous astronomical potential, simply because of what it could be transacted as versus gold, for example. But back then, if you have something that's worth, if you have a full market worth $1 billion, it's a lot easier for that to go from 1 billion to 10 billion than it is to go from 10 billion to 100 billion. Mm-hmm. Does that make sense?
Yeah, makes sense.
Yeah. So because of that, it was very quick to ride up on hype, on people saying, "Oh my God, it's the new gold, it's this and that," and then FOMO, which we all know, fear of missing out. Anyone who looks at a monetary financial instrument, for example, stocks or anything tradable, basically, fear of missing out is so crazy. Like, you have to remember, for it to have hit $20,000, someone bought Bitcoin at $20,000. Someone actually bought it believing this is going even higher. And to put it into perspective, the actual time frame from which it went, like in 2017, that's when I actually started getting interested in looking into it more. From May 2017, the lowest it was in May was $1,366. So 1,300, let's just say $1,500 in May. And that same year in December, which was the high, it reached $20,093.
That's incredible.
So it literally did like a 13 times multiplier from May to December.
Not a bad investment. If you invest
7 months,
lower into that scale, it's not a bad investment.
It's ridiculous. And I don't want to sit here and make people believe that might happen. You know what I mean? It's chances of that happening are slim to none, I'll tell you. But especially in that time frame, what we've seen as well is with the halving, there is a macroeconomical impact of the halving, which is that it becomes more scarce. There's less Bitcoin available to buy because there's less Bitcoin being mined.
Mm-hmm.
So every 4 years, the amount of Bitcoin coming into the market every single day from miners selling to keep up their operations is decreasing. So there's more people hearing about it. You've got more retail investors like you and me, traders, investors, whatever you want to call it, people who might believe in Bitcoin. More people want to get a hold of it. There's less people selling it.
Yeah.
So supply and demand works in very, very, very simple terms, which is if supply increases the demand, it's going to go down. If demand increases versus the supply, it's going to go up. Currently, we can see the demand is there. The demand is growing. Some of the biggest investors, most famous investors in the world have recently come out and publicly said that they think Bitcoin is the fastest horse in the race over the next decade. Every big investor is always looking for the next 10-year thing. What is the best investment now for 1 decade from today? And a lot of big smart investors have finally I'm not saying they've gone all in on Bitcoin as I'm buying $10 billion. They're saying maybe they're managing a fund of $5 to $10 billion worth. Maybe they've allocated 1% to a form of Bitcoin.
Mm-hmm.
So it's not necessarily them buying Bitcoin as such, because it's for them it would be very, very hard to buy $1 billion worth of Bitcoin without moving the price up astronomically, because there has to be sellers on the other side. So what they're doing is buying a financial instrument called a future, which is basically it's people are betting on the value of Bitcoin, and it typically follows a price of Bitcoin. So people are not holding physical, they're not holding Bitcoin at all. They're just saying, I'm willing to bet against whoever's selling this token that it's going to go up.
And if you want
So
more
people
information
are
on
buying.
futures, watch Wolf of Wall Street. Is that right? Is that what they made a lot of his money on
Yes.
futures, just betting against
Wolf
markets?
of Wall Street. Actually, it's funny that you say Wolf of Wall Street is what really got me into the idea of trading, because I saw it and I was like, this has actually happened, and history tends to repeat itself. So I'll keep it very short. But I watched Wolf of Wall Street, went into a bit of a rabbit hole about penny stocks and trading and shorting and blah blah blah. And I found a guy that many people probably know called Timothy Sykes, who is a very kind of famous, also on social media, trader and teacher. He turned $12,000 into $1 million, his $12,000 of bar mitzvah money into $1 million in trading in, I think, 2 or 3 years, which is insane. Now he's got loads of multi-million-dollar students, which he's taught. And I studied for so long. And I actually must have been when I was like 18. I took whatever little, I think I had like $2,000. I worked my ass off to get like 2,000 US dollars in capital, put it into something called Shore Trader, I think it was. They were based in the Bahamas to avoid all these different rules. And I didn't make money on it purely because every single trade cost money to make. So I paid $5 for every buy or every sell that I made. And since I was trading with such tiny amounts, I wasn't able to make money because the cost of trading just ate at my account. Yeah. So I put it all on the shelf, and but I had the knowledge. I spent over a year studying chart patterns, technical analysis, trading psychology, all this stuff. And then my brother one day in 2017 said, "Oh, Bitcoin and Ethereum," and got me into all this stuff. And I was like, "Okay, I'll have a look at it," And I looked at it, and all the patterns I saw from penny stock trading, which are the really volatile markets, the things that move a lot, like you said, like Bitcoin going from 1,500 to 20,000 in 7 months. These cryptocurrencies had very, very similar patterns to penny stocks, because it was the same degenerate people who were trading it. Yeah. It was the people who were thinking, I'm going to multiply my money times 100. It wasn't, George Soros saying, I want to make 7% on my $10 billion portfolio this year. It was people saying, I'm going to turn $100 into $1 million. Right. Those are the kind of people involved. And it's all based on trading psychology and financial psychology. And, these patterns tend to work out based on psychology. And that's what really got me into starting to study about cryptocurrency and looking more into, okay, well, what is the technical side of everything as well? Because I didn't want to start investing or trading in something that just looked like a good chart. I wanted to make sure that I understood what it was and if I thought it had long-term value or not, which I do.
Do you, we've touched on this before, you mentioned Revolut. Do you think we'll start seeing Bitcoin being accepted more as a form of payment in the upcoming years? I've actually got Marek here in the comments saying that he didn't know Revolut can do this. He uses Revolut, and he's asking if you actually trade with Bitcoin through Revolut. So will we see in the future Bitcoin be more readily available? Will we be able to go into bars and restaurants and tap something and all of a sudden we've got a beer for a Bitcoin? And also, as I say, Marek's asking, do you trade through Revolut?
So I don't personally trade through Revolut. It just has that function. The reason I don't is because if you understand trading platforms, I would say you're better off going to trading platforms. On Revolut, they take a higher fee, so there will be a spread. They'll take the spot price, which is currently, let's say, $9,000. They'll say if you want to buy it, you have to pay 9,100. If you want to sell it, you only get 8,900. So they're making a margin on either side. That's obviously because they have to put up some risk to be able to transact Bitcoin, right? Because it can move very quickly. So they're making money by being a simple instrument that a lot of people have access to. You don't need to know anything about trading or about how the charts look or how do I buy, how do I sell, what are the books, like how do I read them. So they make it very, very easy. And to answer your question about whether or not we'll pay with it, I know in Japan there have been merchants that straight up accept Bitcoin, like a card that will have your Bitcoin address attached to it, and you can go in and beep, and then they will transact in Bitcoin. Japan was very forward thinking with that, and kind of ahead of everyone else. But for general everyday use, I see more other cryptocurrencies functioning like that. And there are cards available that hold only cryptocurrencies and are able to transact in stores. So they will also be able to somehow make a transaction. I don't know. Yeah. To make it all very simple. Yes, I think people will accept Bitcoin, but in a US dollar form or
Okay.
for the time being, at least.
Okay.
So the way it is now, just a lot more widespread. I know Visa and MasterCard are in talks with a lot of different cryptocurrency companies to get their tokens available on their cards. So you can store your tokens, or you can use that card to access your wallet or your bank or whatever it is where you have your currency, your cryptocurrency, and then you can transact in that, but it will just make it will find the spot price, which is the current price at that given moment in time, make the trade for whatever amount it is, $10, 20, 100, whatever. And when you scan your card, it will be deducted from your Bitcoin or Ethereum value or whatever you're holding.
Okay. So if I buy a Bitcoin, if I physically buy a Bitcoin, how safe is it? Because obviously a lot of people, when you do anything digital wise, there's passwords involved. How safe is it if I was to buy it? How easy would it be for someone to steal that from me?
Steal it from you would only really happen if you store your cryptos on an exchange. So an exchange is basically just a platform where most people access their cryptocurrency, where you can trade between the different ones. So there's basically the exchange is just an intermediary that says we are willing to create the system that you need to trade your currencies. That's all. They function as an exchange platform. So they host everyone. If you have it on there and the exchange gets hacked, some of your coins could be stolen or taken. That's a risk you run, and of course, that defeats the purpose of having a decentralized network because you're keeping it on a centralized platform. It's like Binance, for example. It's a platform. It's great to use. They have access to so many different things. Um, but if you store things on there, you do run the risk, no matter how good their security is, there might be a better hacker. You do run the risk that someone might hack them and steal a certain type of cryptocurrency where they may have found a weakness. If you hold that cryptocurrency, maybe some of yours gets taken. So in that sense, that is a weakness. If you have it on a hardware wallet, it's really only if you lose it, you break it. You can make backups. Like there are so many ways that you can do it smartly. But I would say the most common way is if you keep it on exchanges that get hacked. And that would typically also more likely be the smaller exchanges that no one really cares about. No one's really going to dig any deeper. If you're holding a bunch of really shitty coins that are worth, 1/100th of a cent, you have 10 million of them. Some places might try to just hack all of that, sell it all at once, and boom, be gone. But generally speaking, you're safest if you have a hardware wallet or just any sort of physical proof that it's yours and that you have the keys for yourself.
Okay. Do you think that people are starting to lose trust in the current monetary system, again, with the current climate, in favor of digital and cryptocurrencies? Because there has been a massive swing, and you're starting to hear more and more about digital currency and cryptocurrencies. Do you think people are now starting to look?
I think yes and no. From a macro perspective, like what's going on in the world right now, the reason everything plummeted not long ago is because there was a liquidity crisis. Basically, people were in stocks, people were in this and that. Loads of people have been making loads of money over the past few years. The day that all that really bad news happened, I think it was like March 20th or something, everything just plummeted. Like everything plummeted. That is what we know as a liquidity crisis. So people are just saying, I don't care. I just want US dollar because that's global reserve currency. So everything is being sold in US dollar. So all the charts just go plummeting down until someone says, right, that's cheap enough. I'm willing to buy it back up here. Even if it goes down a bit, I still think the value will go back up. So that was a liquidity crisis. And that is now, remind me again, sorry, what was completely.
And I'm just asking, do you think that people are starting to lose trust in the current monetary
Trust,
system?
yes.
Digital?
So I do think people are starting to lose trust, but as I was saying, for the time being, I still think more and more is going into US dollar just because that's what we can tangibly say. Look, if I have $1,000 right now, it's worth $1,000. That's it. Right now, US dollar is performing better than most currencies in the world because many people want to access US dollars. So even though they're printing more and more, people in all, like governments in all countries are saying, right, what can we hold that will keep us afloat? Right now, our currencies are not doing very well because we can't trade. Let's get US dollars in our bank accounts or in our vaults so that we can hold that value. Gold and US dollars are currently what will interact as the most powerful things. So the trust loss is definitely there, but right now the need for liquidity is stronger than the lack of trust, if that makes sense.
Yeah.
So people need to have the asset that currently is powerful. It's as if they're like, we're gonna team with the bully right now, but we're gonna question him later.
Okay.
That's currently what's going on. So the US dollar is like the cleanest, I've heard this many times, the cleanest shirt in the dirty laundry. That's the US dollar. So okay. it's the best of the shit, yeah. But it's still shit, you know? Yeah. So everyone is siding with the best of the shit right now, but come payday, it's something has to happen. We're coiling into a non-functioning system. So I do think trust is dropping. And I mean, anyone who understands that the Fed has just printed, $4 trillion now and has more coming out of thin air. Why would you trust that? There is no trust in it. There's absolutely no trust. And they're printing it. They're not saying, yep, we're going to give it to every single individual in America. Put it in your bank account. Please go and spend it. Support the economy. They're not doing that. They're literally just giving it to big corporations and saying, we trust that you will spread the money out. And they're like, yeah, fuck trust. We're going to buy our stock back, make more money, get big dividend payouts, and we're happy. So the trust is definitely leaving. And I don't know if that's going to go to Bitcoin as such, the trust, but it's going to go somewhere.
Yeah, it could potentially.
It could, absolutely, it could for sure.
Do you think we'll ever see mainstream banks accept cryptocurrency? And do you think cryptocurrency would ever want to be accepted by mainstream banks, or is that against their entire ethos, why they were created?
There are mainstream banks now who are offering access to cryptocurrency through their exchange programs.
Yeah.
So that is already happening. You'll see things like JP Morgan and stuff. They were chatting shit for years. Like, oh, Bitcoin's a joke. Jamie Dimon, chatting shit for so long. But they're now evidently hiring people who have worked in the crypto space and they want to build their own cryptocurrencies and their own blockchains, and obviously in a much more regulated form where everything is going to be transacted and evident. So they'll be able to track every move we make. Right now, I buy something on Amazon, that gets put in a database. My name is now attached to a book that maybe has a certain political stance. They now know that about me, that I have an interest in this political stance. All of this information is going around. Super, super scary stuff. It's very, very like deep rabbit hole, but overall, banks, it is in their best interest because they can make a ton of money doing it. A lot of banks are turning it down at the moment, saying, oh, Bitcoin isn't a real asset, blah, 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 because it doesn't have what we believe. And they're saying the US dollar will not be debased. That just came out yesterday. That I think it was JP Morgan actually that said the US dollar will not be debased, but it's well on its way. They just printed so much money out of thin air, so it is on its way. I would say it is in their favor, but they're more likely to make their own cryptocurrencies first.
Okay. Okay. Now, we've spoken a lot about Bitcoin, but there are
Yeah.
many other cryptocurrencies as well. So how many other cryptocurrencies are there currently?
A couple thousand, I would say.
Oh, really?
Probably.
Jeez, I
A
thought
lot
there
of them
was
aren't
10 or
aren't
20.
on anything. Known altcoins, we call them alternative coins, probably about 1,000. Where some people are maximalists and they're like, "Oh, this is the best one," blah blah blah. Maybe up to 1,000. Unknown, many more. Like I couldn't tell you. It's an
That's,
insane amount.
well, that's short. I honestly thought there was maybe between 10 and 20 others, if that. So
No. There's
that's
way more. There's a
incredible.
website called coinmarketcap.com, and on there you can see the pages of like they rank in how much money is currently in them. So what the value is times the amount of coins on the market. That's the total market capitalization. Um, they're in order of how much there is, and there's so many pages. Like you can just keep going and going and going and going.
Do any of these other cryptocurrencies share a relationship with Bitcoin, or are they all their own separate entities created by different people?
The ones that do share are the ones that are forks of it. So BSV, like we spoke about with Satoshi Vision and Craig Wright, they are essentially related to Bitcoin. They are the same thing as Bitcoin. It's just a different group of people who believe in it and who are developing for it and who are um, creating that space, I guess you could say. So there's Bitcoin Cash, Bitcoin Diamond, Bitcoin Satoshi Vision, Bitcoin itself, a couple of others. Those are the only ones that are more or less exactly the same as Bitcoin in its core form. And then you have everything else is blockchain. So blockchain is the fundamental data, which is what creates things like Bitcoin. And every other cryptocurrency it's the cryptographic, I guess, information is built on a blockchain. So every cryptocurrency is built on blockchain basis. As far as I know. I'm pretty sure that's like the outline that defines it.
That sounds like a very dangerous rabbit hole to get into to start
It
researching
is.
other
It is.
cryptocurrencies.
It is for sure.
Which I'm sure
There's a
you've
lot.
been doing
There's
once
a
or
lot
twice.
of shit out there. Yeah, it's very interesting. Like there's so many different things that you can look into, and I think that the next question that would come up would be if there are any that I think are more powerful than others. I think the main other ones to look into would be something like Ethereum, which is a very use case based blockchain. So Ethereum is built to host dApps. They call them decentralized applications, which is built to like Ethereum. You could imagine it as a vending machine, and all of these different things inside are dApps. So all the items inside are different companies that build on the Ethereum platform. So Ethereum essentially is the app store of of cryptocurrency, but it only hosts ERC20 tokens, and I think there's another ERC form as well. But that's like the Ethereum code form, where Bitcoin is something else. So you can't. Now there are services that can like wrap Bitcoin in an Ethereum form, so you can transact faster. That's all very that's the next level of information. But yeah, basically the Ethereum is the main other one I would say, and most other things operate on Ethereum. And then there are other blockchains like Cardano. Polkadot is one that's releasing shortly. There are several others. I think there are probably, I want to say 6 to 10 or 12 maybe actual blockchains. So full on individual things where individual things are built on them. Where other, like most tokens you'll see are ERC20 tokens, and they are related to Ethereum. So they're built on the Ethereum platform. They use the Ethereum infrastructure to build some sort of business or use case.
Right. Okay.
Yeah.
So in terms of an investment, if I'm sitting here right now and I want to invest, what are the pros and cons between investing in your traditional commodities? We've covered them briefly, such as gold and silver, oil, compared to cryptocurrencies such as obviously Bitcoin.
I'm going to quickly have to go get a charger because my laptop's about to die. One sec.
Not a problem, man. I'll just give you the question again whilst you get yourself plugged in. to say, just in terms, if I want to invest today, what are the pros and cons between investing in your traditional commodities such as gold, silver, and oil compared to cryptocurrencies and Bitcoin? Pros and cons.
Okay, so I'll start with the cons just to get them out of the way. And I would say the cons of any investment are always the most important. You need to really evaluate whether or not you're okay with these cons before you get involved in any of it, because that is essentially what could go wrong, right? The cons are that cryptocurrency as we know them, they don't have a very long lifeline yet. We've only had this going for 10 to 11 years. So we don't know if it's going to survive as a commodity. Like your investment could go to zero. No one knows. If everyone decides, fuck it, we don't believe in Bitcoin anymore, it could go to zero, or Ethereum could go to zero. Any of these other coins could go to zero, technically speaking. But that's where I weigh against the US dollar. I also think that eventually the US dollar is probably going to go to zero. You know what I mean?
Yeah.
So that I would say is in its bare form, that is the biggest con, is that we don't know yet. It's not tested through everything yet, but it's done very, very well in its first real crisis. Its first real crisis wasn't that it went up to 20,000 and then back down to 3. Its real first crisis is that it survived COVID. So far, it's survived COVID and it's bounced back stronger. It's at a higher price now than the day that everything went down. Whereas traditional markets are not at the same high that they were before. Mm-hmm. So in that sense, it's a con, but in my opinion, personal opinion, it's already debunked. Like that's the biggest con there is. The other con is that, of course, if you don't really know what you're doing, you also could lose your money very quick. It is currently still very speculative. So it's not like if you have a euro and you're going to buy dollar thinking the dollar is going to get stronger over the next couple of years, that's a pretty, like, you're not going to lose everything. But if you buy a coin and you read or watch a YouTube thing that says, oh, this one's going to 1,000x, and you put $1,000 in that, that very well could be $2 in a couple of weeks. It could. It very well could. I'm not saying Bitcoin and stuff will, but other coins, a lot of people make those mistakes where they just buy in right at the top and they're like, oh my God, it's going crazy. I need to get in, which is the FOMO thing we spoke about. That has messed up a lot of people's like opinion on cryptocurrency because they lost money, which has just made them think, oh, Bitcoin's bullshit. I'm never going to do that again. And everyone's had this opinion that, oh, Bitcoin's going to die. It's already dying, blah, blah, blah. That was the opinion after the market crashed into early 2018, where everything just kind of went down in crypto massively. But it's, the developers have kept developing. The miners are mining way more than now. Like there's way more hashing power, more computing power, more miners putting energy into the Bitcoin network than there was back then, even though the prices are lower. So it's clear that the infrastructure is there. It's built. There is already value. Even if it was just miners and investors, there would already be some sort of, investors would believe in Bitcoin enough to buy it at higher levels and store it away because they think it'll be more valuable in the future. Mm-hmm. That obviously leads to the pros, which is if you play your cards right, you can make a ton of money. You definitely can make a ton of money. I like to see it more as a hedge against what I would be worried would happen over the next 5 to 10 years. So I just personally think that the cryptocurrency space is going to be at a much higher value in 5 years or 10 years from today than it is now. And I think it's going to grow more in value than any other currency will. So now talking versus gold and stuff, you could say that back to it hasn't been tested. Gold has been tested for a very long time. The other cons are that it moves way quicker right now because it is more volatile. There's less people or less money involved. So it's way easier to make Bitcoin go down to 5,000 than it is to make gold go from $1,700 down to $500. So it's less needs to happen for more to fuck up, if that makes sense.
Absolutely.
You need less of a shake for more downside. But again, I just see it as the superior form right now. I just truly see cryptocurrency, Bitcoin specifically, Ethereum, things like that. They are gaining value in actual value, what they can do. Ethereum, especially in things that are built on Ethereum, there are so many use cases now for it, and so many companies are designing incredible things that favor the user and not the multi-millionaire bankers who are getting bigger and bigger paychecks every year, where everyone else is getting a 1% raise over the course of 2 or 3 years. So I just think it's the in every aspect I can think of, other than the few cons that I mentioned, which are very big cons, don't get me wrong. Like shit could hit the fan and we could all lose everything. But I think the risk reward ratio here is astronomical in terms of what can be achieved in the entire space. I
Yeah.
don't want to say you can put in 1,000, you can make 1,000,000. I'm not going to say that.
But you potentially
But
could.
you potentially could.
Yeah.
And if you play your cards, even if you just go safe and say, I'm not going to dabble in the other altcoins, I'm just going to go Bitcoin and put $1,000 in now, I think you could be very, very happy with what happens with that investment
Yeah.
in the next 10 or 15 years, or even 2 or 3 or 4 years.
Yeah. So if I am looking to invest and I've never invested before, how much is the standard amount to invest from either what I own or what I have in savings or combined?
So with investing, the term is always don't invest more than you can lose. So don't ever go out and go all in. Don't put your whole, if you have savings, don't put all of it in unless you're a firm believer of, if you've done your due diligence and you think, look, this, I have decided, no matter what happens to the world, I want Bitcoin to be the top performer. I am all in on Bitcoin and I will only be transacting in Bitcoin from now on. Of course, you go all in. But most people shouldn't put in more than they're willing to lose, because most people who do trade lose everything. They do because they don't know what they're doing. They're trading really quick. They think they can beat the system. Everyone has this idea of they're better at trading than the other person is. But realistically, we're trading against bots and algorithms mostly. Like people build algorithms to trade for them based on price moves. So a lot of people lose, but I would say the normal first investment that most people make is typically, all depending on what you can do, anywhere from $500 to $5,000 if you're better off. You know what I mean?
Yeah.
And I'm not saying 5,000 if you have 6,000 in your account. I'm saying if you've got 100,000 sitting in your account, people might put 5 or 10,000 into cryptocurrency and consider it play money until they realize, like, holy shit, this technology is groundbreaking.
So would you consider maybe around 5 to 10% of what you potentially own or have in savings would be a safe or no?
Yeah, I would say that's a good amount for you to dip your toes in and see what can happen and get a feel for the markets. And again, if Bitcoin does go from 9,000 to 5,000 tomorrow, and you've got $1,000 exposure, then your $1,000 will become $500.
Mm-hmm.
If you have 10,000 in your account, then you're willing to risk the $500. If you put 10,000 into Bitcoin, then all of a sudden you've lost 5,000 Bitcoin. So it's really got to be relative to the one rule a lot of people say in crypto is you should only ever have as much in crypto to the point where you can still sleep at night. So if you wake up and you're thinking about, oh my God, what's my trade doing? You're probably too exposed. You probably have too much in. A lot of people have been there, and I've spent a lot of time as well where you just think about it. You don't even know you're thinking about it, but you wake up, the first thing you do, quickly check, what's the price? That's typically when you're too exposed.
Yeah. Okay. Now, so now I want to invest. I know how much I want to invest. What's the next step? Which easy to use platforms would you recommend someone to use to buy and sell cryptocurrency if they're doing it for the first time?
I would, for simplicity's sake and for scalability for most people, I would say eToro.com is a very good starting platform, because you don't need to know anything about charts or anything. You just need to know whether or not you want Bitcoin. If you do, you can go in, you can buy X amount. In a small denomination is probably $10 on eToro. And then you just have it there. You can revisit eToro when you want to sell it. And it's as easy as that. Their fees are a little bit higher when you sell. They do the same thing as Revolut, for example, where they mark the price up a little bit when you buy and a little bit down when you want to sell, because that's how they make their money and can offer the platform. And another really good thing about eToro is, if, let's say, you do want to do it, but you're a bit wary about the space and maybe you'd rather try to trade, you can open up a paper account on eToro. So you can go in and say, I want to start with $100,000 of fake money, and then you can practice trade. So you can follow the market exactly without putting any money on the line. So you can actually see, instead of thinking, oh, I would have bought here and I would have sold here, you can physically go and do it with fake money, and then you can see how you do. So that's a really good, I would advise anyone who thinks trading could be a fun thing to do. to look into that before they do anything else.
Yeah.
But yeah, eToro really good. Then the other one I've recommended to you is Binance. Binance is good in terms of if you know how to do exchanging already. I know that the fees for depositing, didn't you say it was extremely high for US dollar and stuff?
The fees, I think that was, yeah, Binance, the fees were, they were very high, man. Very high. To deposit fiat currency, it was very high.
Okay.
And it put
So
me
I know
off.
another place you can do it is then Coinbase, for example. I'm not sure if they're open to anyone outside America, but Coinbase is one of the bigger exchanges where you can go and deposit fiat currency directly. FTX.com is more of a trading platform, but there you can also go in and buy Bitcoin and essentially hold it as an investment if you want. But yeah, for most people, I would say eToro, or even go as lazy as something like Revolut, because Revolut has access to it, and it might cost you a bit extra to get what you want, but you don't need to know anything. You can literally just go onto Revolut and press commodities or press cryptocurrencies on like the dashboard, hit Bitcoin, and type in how much of your current, dollar, Danish kroner, Indonesian rupiah, whatever you have, how much ever you want to buy of it, and there you go. Then you've got it on your account.
Quite simple.
Yeah. So it's getting very easy. And as I said as well, there are other companies that are cryptography based who are now creating credit cards. There's one called, surely it's not Bitcoin.com. It's something like really obvious.
Yeah.
Where they've created a card that literally only holds cryptocurrencies that you can go buy them with your money and then go spend it. So it's getting very, very, very easy to onboard. Also, apps like Celsius Network, they are a cryptocurrency themselves, basically, but they function as more or less as a bank, but where they incentivize using them for other people by offering way higher interest on your cryptocurrency than anyone else holds. So for example, if I have a Bitcoin, I can go put one Bitcoin on the Celsius application on a wallet with them. So it is centralized through them, but I can hold my Bitcoin there and they'll say, look, if you keep your Bitcoin with us, we might lend some of it out, but it will never affect your balance. We'll just use your balance as collateral. But we promise we'll give you 6% a year. So the banks currently are giving 0.002% a year, some shit like that. So you can go in and that Bitcoin, you can take that out at any second you want. And banks, they close for, the weekend transactions. You can't, if I'm sending money to you and I send it Thursday afternoon, you'll probably only get it Monday morning or Tuesday morning. Yeah. Where with Bitcoin or other things, you'll have it sometimes within a second, sometimes within 30 minutes, all depending on which blockchain you're using. But it's just a lot more efficient, man. It's so much smarter. Like the world of banking is so outdated. It's unbelievable that we're still putting up with it.
Well, that's what I'm saying. The time is now to start investing in, not just investing financially, but just investing in the education of tomorrow's world of monetary systems and digital currencies. So this is why I wanted to do this podcast. Now, if someone's listening to this and they've got themselves all excited by hearing the options and hearing the information, I think we've covered a little bit about it before. Obviously, are there any alternatives to Bitcoin? I know you touched on Ethereum, which you would recommend that other people might check out.
So other things that I would do or say to people is to only really consider things that actually have a purpose. One of the things that happened in 2017 when everything ran up sky high, people made loads of money, but people lost loads of money because they bought too high, was that there was a blockchain for everything. And they were using blockchain for the most ridiculous stuff where it worked fine, like trying to put email on blockchain. You don't need email on blockchain unless you're a legal company, for example. So people were putting Airbnb on blockchain and they were putting iTunes on blockchain, and like all these different things where in theory it can work, but the world doesn't need it.
Yeah.
So what I would suggest that people do, and what I always do, is I look for things where I see that, this part of technology or the world actually really needs this project. Like this project could benefit so many people that once they use it, they're like, why did I ever do anything else? Those are the kind of things that you should be looking for. So I'll give an example of one. Chainlink, it's called, is one of the companies that I'm very bullish on. Like I think it has a very bright future because they have worked out how to basically make the Ethereum blockchain interact with the real world. So Ethereum is very, very smart. And Ethereum, what it does, it seals contracts by making smart contracts. So basically, if you and I have a contract on paper, essentially we say we can't breach it, but if one of us does, we go to court. With a smart contract, it cannot be breached. So if we have a deal where you're going to pay me 5,000 and I'm going to give you something, that transaction is only going to happen when it happens. There's no way of me fooling you into being like, oh, okay, just pay me today and I'll send it over to you tomorrow. It literally only happens when it happens. The problem with the smart contracts on Ethereum was they couldn't interact with anything outside of the Ethereum blockchain. So if companies wanted to adopt this immediately with their own contracts in their office and they didn't have an Ethereum application, they couldn't use it. So Chainlink, for example, one company, they are focusing on allowing companies, people, individuals, stuff to use the Ethereum technology without having to know anything about Ethereum. So they're creating interoperability. So these companies like Chainlink, they are the ones that I think have a massive use case because they are actually going to save like hours of time, countless hours of time for businesses and money and legal disputes and things like that. Always try to think of where does this have an application in the world. And another thing that's very, very big is gaming. Huge gaming, because if you think about it, how many times when you were younger, if you were playing a game, like I left my PlayStation on all night to not lose my data, or to if I have to leave it on for 10 hours to gain enough points to win something. But then when you're done playing that game, all of that effort is gone, right?
Yeah.
So something like Engine Coin or Engine, they're basically creating a space in Minecraft already functioning where if you generate money or tokens in Minecraft, you can transfer those over to any other game that's run by the same operators or who've agreed to use those tokens. And let's say in one game, you're a medieval person who gets a sword, and the more coins you earn, the stronger your sword is. And in another game, you're playing in the future and you have like awesome guns, and with more coins, you can buy better guns. You can make money in one game, tokens in one game, and use those exact same tokens on your alter ego persona thing in that game. So you can be the same person in different realms and literally use that same token to buy different goods and transact with people.
We could start
so it has
within gaming as well, and then in-house transactions.
Gaming is huge. It is one of the biggest things, one of the biggest emerging things in the world. It's already massive. Like no one would have thought 2 decades ago that there would be like hundreds of millions of people watching games of Fortnite or whatever online, where now it is sought after, where people want to be able to build an online alter ego, and it's not going away. It simply isn't. So these are the kind of things I'm really, really interested in at the moment. The ones that are a good use case in business, I would say, in banking, so in creating banking for yourself, and then things like gaming. It's just the upside is insane, and it's purely from a use case standpoint.
Okay.
So I'm not thinking gamers are going to go invest. I'm not thinking gamers are going to be like, oh, I'm buying this token because I think in a year from now it's going to be more value. It's because gamers actually use them. They utilize the token. So it becomes a utility token. And another very interesting area is security tokens. So essentially just everything to do with security and goes back to the business. So it comes to legal things, security tokens, things that offer a form of security. They're very interesting, but they then have the issue with the SEC in America, Security Exchange Commissioners, what's determined as a security, what's determined as a utility. That's where it's really difficult, but there's a lot of interesting stuff going on, and there's new development happening every single day. And one of the latest ones, for example, Theta token just exploded because they just landed a deal with Google and with MGM Grand, like the Hollywood production company. Basically what it does is I think the Theta portal, which is like Netflix or YouTube, but a new decentralized version, is going to be installed on all the Samsung 20 or something like that. 750 million phones in America are going to come with this app pre-installed. And if you watch on that, you basically, I think it works like you actually gain tokens from watching that to then unlock other things. So you're creating a new space of a whole new environment of value. It's honestly insane. It's so, there's so much going on and so many interesting things to look at, and it just the list is never ending. I mean, I could talk to you about this all night, but we
Oh,
could
I
go
know
for
you
2
could.
hours.
Oh, I know you could. No, I think we've managed to cover quite a lot, and I'm very appreciative of the information that you have given, man. And obviously, if anyone's watching and or listening up to this point and they do want to find out more,
Yeah.
is there anywhere that you could send someone? I've also got Yannick here in the comments saying, do you have any good websites or anywhere else, any other resources where you can get further educated on this?
Yes. So I am going to. I've had more interest than I thought on the topic, because I did put up some stories about just generally investing and macroeconomy and stuff.
Mm-hmm.
And I've had a lot of people actually share a lot of interest about this. Not just about crypto, because I don't want that to be the only thing that I try to push on people at all. I don't want to push anything, but I want people to understand about it. But I will be most likely in the next week or so, I'm going to start a newsletter, I think, that people can sign up for. Okay. Where I want to just offer information of things that I watch and things where I find information from other people who do all their research. So I'll kind of trickle through, because I spend a couple hours a day on this anyway. So I'll trickle through all that information, then share my favorite findings with whoever, wants to receive it. I don't want to blast the stories all too much about it, because it's some people may get offended by it. They just don't like the topic. Other people might think it's a scam. I'm not going to spend my time on them either. So I want to make sure that whoever finds it interesting, they can tune in. And I'm thinking once every 2 weeks or so, I'll send an email out with my favorite things from the past 2 weeks and let people know what's going on. If there's any major updates, of course, I'll let people know. And then another thing I'd say is, I can actively say that people should really look into a couple of resources that I use actively. And those would be Real Vision Finance. It's called. These are all, you can find all of these on YouTube, and they release videos for free all the time. Real Vision Finance, they're very much on the macro economy things. They look into a lot of different things, everything macro, like literally anything in the world. They will talk about it in a financial standpoint. So they're really, really good, especially a guy called Raoul Pal. You'll see him on the headlines. I think he's the CEO and founder. Super intelligent people. And then Nuggets News is another one. He's an Australian, super intelligent multimillionaire. I follow him. It's almost like my morning ritual to watch his YouTube videos if he's released a new one. Have it with my coffee. So it's just he also really is good at looking at the macro environment and then showing how that all relates to crypto. So he'll look at something that's going on, the tension between America and China, and be like, this could impact this crypto in this way, so on and so forth, blah, blah, blah. And this is all happening in these banks and people have more access. And so he covers a lot of good stuff. So that was Nuggets News. And then there's Data Dash. He's the biggest YouTuber within the cryptocurrency space with 330,000 followers, I think, on YouTube. Also very, very intelligent. He's more on the investing, long-term swing trade investing side. But super good at like decoding macro news as well. He finds really interesting points to talk about almost every single day and gives valid reasons for why or why not something may happen. I think those are like the main things I focus on. Another one, something Pompliano, the Pomp podcast. You can find him on any like podcast provider. He also has a lot of guests on. He talks about everything from like literally anything in the world, goes into detail, but he's also very into cryptocurrencies and finance and stuff. So those are the 4 main things I would say. And the last one, if you want to get into Bitcoin properly, Andreas Antonopoulos, he wrote basically the Godfather book about Bitcoin. He has a history in cryptographic security, I believe. And he found Bitcoin in 2011, I think, and then went into a rabbit hole. And now he is like the godfather of unbiased information about Bitcoin. And the best thing about him is he doesn't give a shit about the price. He seriously, when people ask him about, what do you think about this price? He says, I don't care to venture a guess because I don't care. He literally just believes in the system.
Yeah.
He's Greek, so his parents went through the whole thing in the economic crisis in Greece where everything just went, fuck, you couldn't get your money out of your bank. Like, he's experienced all these things firsthand, and he sees the value of Bitcoin. And now he travels around the world literally just speaking about and educating about Bitcoin. And he is so well articulated, well formulated, knows his shit. Is really, really good.
I can imagine anyone that's been through an economic crisis like Greece, you would lose a wee bit of faith in the system. So I can totally understand why he's purely invested in Bitcoin as an entity rather than the value.
Yeah, exactly. He just believes in what it is. You know, he believes in it as a system, as an entity, as you said, and doesn't really care to speculate. So yeah, those are the things I would recommend looking into.
Yeah.
And then if you want, hopefully by the time this gets on a podcast, I'll have a newsletter link sign up for if people want more information.
Yeah, I'll include any links that you want to include. I can include these in the descriptions and stuff, man. So that's not a problem. I'll send them your way.
We'll do that. Awesome. Is there anything else that you wanted to cover at all, or is it?
Well, for me, I think we've managed to cover quite a fair bit. I didn't realize that this would take 2 hours. I thought this was going to be when I laid out the flow and the questioning and stuff like that. I didn't realize it would take 2 hours, but a lot of good information in here, man. It's something that people can revisit at a later date, whether it's they've watched it live or listened on iTunes, Spotify, whatever, or on YouTube. So it's a great resource. I think it's very relatable, and you've made it. You've told it in a very easy to understand way, which I'm very grateful for. I'm just going to look quickly through the comments. I think we've covered some of the comments in there, but I've also got Yannick in the comments asking, what do you think about Ripple? So what is Ripple? Do you know what that is?
Yeah, so Ripple is one of the it's one of the cryptocurrencies that exploded in the 2017 boom as well. And I personally don't look at Ripple much at all. It was a great investment opportunity back in the big bull run of 2017. I don't care much for it just because I think that they are trying, the Ripple, the company itself has a ton of applications, and they work with a lot of banks around the world, and implementing the Ripple kind of code and information, the data that Ripple creates, they are working with a lot of banks, but none of these banks are using the cryptocurrency of Ripple, which is what they want you to believe. The cryptocurrency is called XRP. And as far as I'm concerned, it doesn't have a major use case other than a hype factor. I can't say too much because I on purpose didn't look much more into it when I found these things. And Twitter honestly is a great resource for this stuff if you find the right people to follow. You can follow me, I'm not the Freedom Complex, just Jonas Hornehoj. On Twitter, we'll put the link below.
Yeah.
Then you can see who I'm following, and generally these guys give really, really good information. And these include the people who do podcasts, and also include guests of people who have been on the podcast and stuff. I find Twitter to be a really, really resourceful platform now. But for Ripple, can't say too much. Personally, I don't dabble too much. I think the company itself has a wonderful future, but XRP, Ripple coin, I can't say anything because I don't plan on investing in it at all.
That's fair. That's fair. It's a good answer. Yeah. Very conservative. Right. And that's it, man. For me,
we haven't said it yet, is that nothing I have said about anything is investment advice.
Yeah.
I'm not a licensed investor or advisor or any of the above. I'm simply someone who likes to spend time on this stuff, and I just want to hopefully give value. And the companies I've mentioned, look into them. Don't invest in them. Just look into them and see if you like them. See what you like about them. If you have any questions, feel free to DM me or send me an email. I'm happy to go through anything. Always love to, get into a conversation about this stuff. But take everything that I say with a grain of salt, because obviously there's bias. I believe more in the crypto space than a lot of other people do. But I think that we can together through things like this inform people. I don't want to say convert people, but inform people one at a time, or hopefully more than one at a time. And just get people to understand that now is the time to take control of your own finances. It doesn't matter if you have $100 in the bank or if you have 100,000. I don't have, in the business I'm in, there's not a whole lot of float money. We don't have a whole lot of money laying around. Normally we're just making ends meet because we do travel a lot. And, Jamie, as well.
Yeah.
There's not a lot of money in excess.
Yeah.
But I do what I can to put everything that I have that I don't need to survive right now into cryptocurrencies. And I'm very interested as well in other hard commodities like gold and silver, just because of where I think the US dollar is going. So I don't see it as a huge, massive trade opportunity, gold and silver. I just see it as a good hedge against what might happen with either the euro or the US dollar or the rupee or whatever currency you're denominated in.
Okay.
So yeah. And full disclosure, I do own some of the assets I've spoken about. That also needs to be said.
Full disclosure, man, as you say, there's been no affiliates involved in this. It's purely opinion. It's purely things. I'm a big believer, and I said this in my last podcast, that you collect information from left, right, center. You collect from every corner of every resource, and you make your own informed opinion. And all this is your informed opinions. You're not trying to get anyone to invest. You're just trying to educate people and encourage people to make their own decisions and to do their own research. And it's very important right now, more than ever, to be looking outside what we class as normal.
Absolutely. Because there is a new normal on the way. I think that's the biggest takeaway from this should be just look into it. Spend an hour today, tomorrow, the weekend, whatever. Look into what the use case is of cryptocurrencies and what the current situation is in terms of, money printing. Maybe, Jamie, I'll give you a video to link here, just one of the videos from maybe Nuggets News or a couple of videos that would be a good start, where you'll spend maybe a couple hours watching them on YouTube, but with these videos, they'll give you the core information you need. So if this has interested you at all, and well done if you've listened or watched to this point, but look into those and see for yourself. I'm certain that if you're interested at this point, you'll be blown away by what's available on the internet right now. It's crazy. I'm spending several hours a day on macro economy and crypto, and I'm still learning new things every single day.
Okay. Perfect, man. Well, I think we can round it up there. I think we covered pretty much everything we wanted to cover. So I'm just going to say, This is a wee podcast for big subjects and huge personalities like yourself with a wee bit of Scottish humour. So I appreciate that, man. I'm going to stop the streaming now. And then thank you for everyone who, I just want to say, obviously this is the first ever stream. I forgot about that. So thank you to anyone who either tuned in and is potentially still watching, or if you're listening to this on Spotify or iTunes or on YouTube or whatever. I really, really appreciate the support, and thank you for taking the time to listen to Jonas, and for Jonas to yourself for giving us all this information.
You are most welcome. It was an honor to be on your first live, and I can't wait to do this again.
Absolutely, brother. Take it easy.
All right, you too, bro.
Cheers, man. Cheers. I would like to thank my beautiful patrons, Stephanie, Taylor and Annika, who continue to financially support this podcast through patreon.com. If you found value in these episodes, then it would make a massive difference if you were to become a patron too. To find out more about how to sign up and what benefits you can receive, then head to patreon.com/Jamie's Wee Podcast.